At chartingwealth.com, we want you to learn a reliable way to grow your wealth. We want to see you as an individual investor empowered. People want a reliable method where they can take their nest egg, whether it's the funds you've set aside to invest, or it's your 401k and you've set up a plan where it's self-directed, or you can make calls to the brokers that are helping you and make your purchases. Now, we are not a stock calling service. We're an education firm. We want to educate you as to how to read these charts so you can be empowered. And our method is one that is low risk and high reward. Not high risk, high reward. Options aren't the answer unless you want to somehow maybe use profits from purchases to then go take extraordinary risks. But why complicate things, okay? Let's just talk about how do you grow what it is you have, year in, year out, month in, month out. Now, you've got bonds, stocks, international bonds, gold, cash. You've got people that talk about value investing, growth investing, momentum investing, dollar cost averaging, aggressive investing, balanced investing, defensive investing. But how about another? How about a system that we cover every day where we look for 4 ETFs to be able to offer us opportunities day in, day out to make maybe 1-2 successful entries and exits out of the market a month in order to grow your nest egg. And this is not something where you listen to what we say every day and go out and start buying stuff. It's not that at all. We're not a stock calling service. We provide this information for free over the internet. We specifically say that's not what we are. We want you to practice, though, what we teach. Put with that everything else you learn and see how good you can get at doing this week in and week out. And it is not super complicated. I look at some of these websites and YouTube channels and all where you see these funky screens that are crowded with a million things. Somebody sitting around all day in their pajamas trying to make $500 here, $1,000 there, and some complicated high-risk strategy. We're not talking about that at all. If that's what you want to do, go find those guys. But what we're talking about is controlled growth over time, where you learn how to read these charts. Because think about it. What do stocks do? They either go up or down. Sometimes they'll track sideways for a while, but mostly they go up or down. And you've got to make a binary decision. Is it going up? Is it going down? When's the best time to jump in? That's what we talk about. That's what we go over every day. And we only follow 4 things. Why do we only follow 4 things? Because we keep it all super, super simple. We follow the S&P 500 as represented by SPY. What's that? Well, that's 500 big companies. It's a large chunk of the money that's in the market. We follow that day in and day out. We look for trends, and then we follow those trends. Those trends typically set up on a weekly chart, which is what we have on the screen right now. And what's fascinating when you look at that weekly chart and you see something we call a weekly vertical crossover, that is where a blue line at the bottom of our screen called the price percent oscillator, and again, we have trainings at the website that explain all of these things. There's a great training on the price percent oscillator, and we have it set up, and when it crosses the red signal line going up, typically what's going to happen to the S&P 500 is going to go up for many weeks. And if it crosses over going down, it's typically going to go down for many weeks. And then when it starts to change, we are looking to get out, take what we can get in our practice trade, and move on. But we look at time and time again where these movements work. They don't always work. Nothing in the market always works. That's why we don't just use our weekly chart. We use the weekly chart to see where the big trend is going. Then, when we see that big trend taking place, we look to jump into that trend and follow it. We also use smaller charts. We use the 2-day chart, which is like a smaller wave. The big wave is the weekly chart that represents 5 days of movement. The smaller chart is the 2-day chart. We actually call that the intermediate chart. It's smaller than the weekly, and that also alerts us to changes in trends, and we want to make sure that the weekly and the 2-day are moving in the same direction. And then we look to the 4-hour chart, which is our smallest chart, and it moves in 4-hour increments, 2 movements a day. So it takes 4 4-hour candles to make up 2 days of movement. And of course, it takes 3 2-hour, well, 2.5, 2-day movements to make up a weekly movement. And what we look for are changes in trends and then to jump in and follow those trends. And again, it's a great deal of fun to learn. It's a great deal of fun to do practice trades and see them work. And that's what we do day in and day out as we follow the charts and as we look for things to set up and provide us with opportunities. So besides the S&P 500, which again are 500 big companies that move a large part of the market, we also look at QQQ, which is the NASDAQ 100. Those are the tech stocks, and we know America rules in tech, and we look at those also. And again, when we look at this weekly chart, we can see so much of the time when it crosses over clean and pretty, we see that the market typically moves with it. And that's what we look to do. Now, we see certain times when the market's moving down. This is nothing for you to be overly concerned about, but there are things called inverse funds that actually move up when the market moves down. Now, isn't that interesting? Which means that you can go from something like QQQ, which of course, when the market's trending up, you can do a virtual purchase and ride it up until the trend changes or wears itself out. If the market's going down, you have one of two choices. You can pull yourself out of the market, go into virtual cash and wait for the market to bottom out and then get back in, or you can look for an inverse fund. We have a great teaching at the website, one fund that is the inverse of the NASDAQ 100 is PSQ. It's actually a short fund of the NASDAQ 100, and it actually moves up when the NASDAQ 100 moves down. Now, isn't that interesting? And it moves up pretty much percentage to percentage, not dollar for dollar because they have different prices, but it does move in the same percentage. So again, that's what it's set up to track. So it gives you opportunities to be able to actually, when the market is going down, to actually jump in and ride an up train instead of watching your money fall in your virtual account. And I keep using the word virtual because we are not a stock calling service. We're an education firm, first and foremost. So that's what we talk about every day, is following these markets, the S&P 500 and the NASDAQ 100 when it comes to stocks. But we also track two other things. One is 20-year U.S. Treasury bonds. Why do we track Treasury bonds? Well, when you hear people talking about having a balanced portfolio, what do they always say? I want to have some of my money in bonds, some of my money in cash, some of my money in stocks, and maybe some in gold. Why? Well, because a lot of times when the stock market goes down, a safe haven to put your money is the bond market, and it moves up many times. Not always, but many times. And it, again, is another thing for us to track, and we can look and see that it is trackable at times. Other times it's not. But when there's huge moves in the market, when there's a bull market or a bear market, you can look and follow and see big things happening where if you're tracking those, it's not rocket science to figure out just what is going on, when to get in and get out of the market when it comes to those things. That's what we want you to practice. The more you practice, the more you understand, and then the more you're empowered to make intelligent decisions about your portfolio and what's going on with your life and with your money. This is what we're trying to train you to have the ability to do. And it takes practice. We ask you to spend 10 minutes with us on a daily basis to hear what we're talking about, to learn the terms, and then to do some of the studying that we have available at the website to understand what the price percent oscillator is, what the derivative oscillator is, what the candlesticks that we use called Heikin Ashi candlesticks. We've got a training on the candlesticks there. They show price movement, and they're helpful in understanding what's actually happening with price. We also have Bollinger Bands, which are basically volatility bands, where stocks typically stay. The tighter the range gets means the less volatile. The wider it gets, the more volatile the ETFs are. And again, we use the word stocks and ETFs. Remember, what we're talking about here are exchange-traded funds. They work very much like stocks in that they're tradable on the open market. They typically have, the ones that we look at are very liquid, which means the difference between the bid and the ask price, what you buy it for and what you sell it for, is typically quite close. So that if you bought something and wanted to immediately sell it, you're not losing anything but maybe a penny or two in a lot of instances between what you bought it for and what you sold it for, which means it's liquid. You can get in and get out, which is a big deal. When you have small companies that aren't liquid and publicly traded, you can be stuck and have to take a significant loss. Even if the stock went up in value, it might be hard to get out of it. So that's what we like about ETFs. They look like stocks, they trade like stocks, but they can represent other things, such as baskets of stocks like the S&P 500 and like the NASDAQ 100, and of course TLT, which is 20-year Treasury bonds. It tracks the price of those. And again, liquid, you can get in and get out. So bonds is the third thing that we track. And then lastly, we track gold. And gold is very fascinating. It is a commodity, but it's also the oldest store of wealth that we have on the planet. And gold is something that we are very proud of when it comes to our weekly chart, which is amazing when you start looking at how well it appears to track gold. When it crosses over going up, most of the time it goes up. When it crosses over going down, the price of gold goes down. And you can go back for years and look at our charts, and you can see, wow, when gold starts to roll over on that price percent oscillator, it's probably about time to get out because it's getting ready to go down. If it rolls over going up, probably time to get into a long-term gold trade and watch what it does. And again, these are for practice trades for you to learn. This is what we do. Now, I have people all the time say, hey, I want to track oil. I want to track these stocks. I want to track this. I want to track that. And I keep saying, keep it simple and straightforward. If a CEO of a corporation dies, a jet goes down with most of the corporate board on it, they have a bad quarter, any number of things happen. It's a pharmaceutical firm and the drug doesn't get FDA approval and the stock crashes overnight. That can really suck a lot of money out of your practice trade, as opposed to looking at indexes like gold, like 20-year bonds, like the NASDAQ 100, and like the S&P 500, where they, in many instances, move steadier and longer, and in many instances are much easier to track. They don't follow the whims of corporate earnings and warnings and all these other things. Now, they can, of course, be affected by events like 9/11. They can be affected by systemic crashes in the market. But again, you typically have the ability, because of the liquidity of these things, to get out if things start getting risky, to go into inverse funds if you think things are going to go down sharply, or again, just to pull your virtual trading dollars out and wait and see how things sort out. The beautiful thing about being an individual investor as opposed to a professional trader on Wall Street is they have to trade. They have to make trades all the time. You don't. You can wait for the perfect setup. And many times you will see things that set up to allow you to jump into trades once a month, 2 times a month, so you can keep your regular job. You don't have to sit at home in your pajamas. You don't have to try to figure out what's going on. What you can do is follow with us on a daily basis. You can print out in the show notes if you just go to chartingwealth.com and sign up for our daily market review, which is free. Once a week, you'll also get our comprehensive review and forecast. What you'll see in the show notes are PDFs to things like our daily market worksheet, our weekly market worksheet, and our trade worksheet. We actually have trainings, again, under the training portion of the website where you can learn how to fill those sheets out. But when you do practice trades, when you're listening to the show, you can fill these out and supercharge your training and start creating your own trader's almanac, your own trader's journal, so that you're able to see what's gone on in the past, what you've learned, the practice trades you've done, the ones you've done well, the ones you've done poorly. And I'm telling you, as binary as the decision is to either buy or not, it's not nearly as easy as it sounds. It will take work. It will take struggle. It will take a daily effort. But we don't ask you for more than 10 minutes a day on this daily effort. But you have to do it day in and day out. If you've always been interested in the stock market, you've always been interested in having the ability to know what's going on and to understand the way that the market's fluctuating. Is the market in an up move? Is the market in a down move? Is the largest chart you look at sometimes the quarterly chart? How's the overall mood of the market? What's it doing on the weekly chart? What's it doing on the 2-day, the 4-hour? What's happening? Should my money be in there? What should I be thinking about? You notice I've said nothing about the news. I've said nothing about Bloomberg, the Wall Street Journal, CNBC, watching these shows, paying attention to all this, because I don't. I let the charts tell me what's going on. Invariably, if you follow things and you hear that such and such a company had great earnings, and you go, wow, they had great earnings, I need to go buy it. And then you buy it and you find out that the next day it drops $10. Why? Well, there's something in the market called buy on the rumor, sell on the news. It means that the market knows what's going on. And in fact, many times it digests it before that news comes out in the marketplace. So my question to you is, why pay attention to the news when you can watch these fluctuations in the waves in the market? And you can know if the overall mood of the market is negative in the S&P 500, the NASDAQ 100, gold or bonds, or if it's positive. And you can then help over time inform yourself as to what makes the most sense to do with these practice trades. I want you to get a feel for what's going on and that it is not this enigma that most people think the market is. I did for years. My background is my undergraduate degrees in business. I have a master MBA, a master in business administration, and I have a law degree where a lot of my courses were in securities, you name it. But when I got all those degrees done, graduate, postgraduate, and undergraduate, I knew nothing more about the stock market than I did as a teenager. And it wasn't until I started 20 years ago investing my time and energy into what was going on in the marketplace, studying, learning, trial and error, working day after day to figure this out, that I finally started to discover the things that really counted. And the one thing I learned that I've already spoken about is keeping it simple. We use one primary indicator. That's the price percent oscillator. which is very similar to the MACD for those of you that are familiar with it. And we use that as our primary indicator telling us when we have big changes in trends. And invariably, that works as a good signal that something is happening. The market is either turning over going up, turning over going down. So those kinds of things, coupled with our Heikin-Ashi candlesticks, coupled with our derivative oscillator, coupled with our Bollinger Bands, coupled with our trend lines, coupled with a number of things that we use that we talk about daily on the show, those things are what allows us to be able to accurately track these markets. And I got to tell you, it's a lot of fun. It is. There are very few things in life that are more satisfying than jumping into a practice trade, doing things the right way, seeing it increase in value, shoot through the roof, and know that you did it, that you were able to jump in and make it work. You figured it out. You beat the market. And it's not that hard. It takes time, energy, and dedication. And what you get from that is the ability to, day after day, week after week, month after month, look for successful entry and exit points from the market and be able to empower yourself to make the right decisions when it comes to growing your wealth and to understanding what's going on. That's what we're all about here at chartingwealth.com. We've dedicated ourselves to bringing this to you on a daily basis, and we want you to join us on a daily basis. If you don't have the time or energy to do that, part-time doesn't work. And it just doesn't. And if you don't have the ability to find 10 minutes a day, whether you get up 10 minutes earlier or you stay up 10 minutes later, or you find time during your lunch hour to watch the prior day's training, you're really wasting your time. This isn't the kind of thing that you can do on a haphazard basis. But if you are interested and you're willing to dedicate your time and energy, you can do this. Doesn't matter your education level, it matters your commitment level. And we are here for you. I want to encourage you to go sign up at the website to get the daily market reviews, and once a week you'll get that comprehensive review and forecast. Special trainings come out. Those will be made available a lot of times, and they're already there. The website's full of all the trainings you need to get started. And we just want to encourage you to empower yourself with what we have to teach. And what we have to teach is powerful, and it is life-changing. And we want to change your life for the positive. I look forward to working with you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.